Hello and welcome to the 78th episode of the Accountant's Success Secrets podcast. I'm one of your co-hosts, Mark Lee, and I run the Sole Practice Club for Accountants. I'm also a mentor, speaker and debunker for accountants.
And I'm Philippa Haynes, a branding expert for accountants, supporting you to stand out.
Each week on the podcast, we showcase another experienced accountant or bookkeeper who we think can inspire and encourage other accountants and bookkeepers in practice.
We both recognise that every accountant and bookkeeper is unique and distinct. They have different backgrounds, experiences and reasons for starting and building their practices.
So we ask them to share their stories, including the highs, the lows, and what they've learned along the way. We look to explore what makes them different in terms of their background, their successes, their failures, and their focus.
Our aim is to provide some fundamental insights for others like you, our loyal listener.
And if you'd like to share your story in a similar way, do please get in touch with Philippa or me. We have just 2 slots available later this year, and we're also looking for guests in January, probably not anyone who still suffers from the January rush.
Exactly. So today in our 63rd interview, we are delighted to introduce Richard Wilson-Artus. He runs MWA Accounting, and I can hear people rattling around in the background, so there is proof of that. But it's an ACCA-regulated practice, which he launched in 2014 in Manchester city centre. The firm comprises a small team and has over 50 5-star reviews on Google and provides the normal wide range of accounting services. They also have a particular focus on e-commerce businesses, as well as food and drink operators, content creators, property investors, and property developers. Richard's career in accountancy started immediately after university and continued with roles in a number of accounting firms, as well as a stint as a business growth mentor.
You are very welcome here, Richard. Is there anything you'd like to add to that intro, or anything you can do to explain the noise that we can hear behind you?
The noise, sorry about that, is there's building work going on in our building at the minute. Sort of is what it is, unfortunately.
All right, we'll sort them out from here. Yeah. This is live anyway. It makes it, people realize that, so that's good. Anyway, just before we start, we must thank the sponsor of our podcast, Pinnacle Global Group, the trusted offshoring partner to over 150 accounting and bookkeeping firms across the UK and Ireland, led by London-based chartered accountant Mike Pandya. With offices in London and Mumbai and a team of over 300 plus professionals, Pinnacle provides both. Actually, I think we're going to need to get rid of some. Are you able, Richard, to see if you can quieten them down, because it is really noisy?
Or at least mute when you're not talking.
Yeah, because
sure. I think they've just moved, but yeah.
Great.
Sorry about that, listeners, but I know that for those people who are going to listen later on, it will be really, really difficult. So anyway, let's go back. So we're talking about Pinnacle Global Group. They have offices in London and Mumbai and a team of over 300 plus professionals. Pinnacle provides both compliance resourcing from accountants, bookkeepers and payroll admins to tax and audit associates. Also value-added support, including management accountants, virtual finance controllers, financial analysts, and more. They're GDPR compliant, ISO certified, covered by professional indemnity insurance, and offer flexible models, full-time, part-time, and pay as you go. You can even start with a trial period or join their sponsored trip to Mumbai to meet the team in person. Find out more at www.pinnacleoss.co.uk or click the link wherever you're listening to this podcast.
Also supporting the podcast is the Tax Advice Network. Their website enables accountants to choose specific specialist tax advisors for general tax support or for help across any of over 100 areas of tax. It's free to use. You just pay the tax advisor that you choose after agreeing terms with them, whether for ad hoc advice or a regular tax clinic type support service. Go take a look at their website, find a taxadvisor.online, where you can also register to get their weekly tax tips, which are written especially for general practitioner accountants.
And finally, before we start the interview, just a reminder to subscribe to our podcast on the Patreon platform. This is where you can show your love and support for Accountant Success Secrets and also receive exclusive Patreon-only extras.
You'll need to download the Patreon app, but once you've subscribed, you'll get the extra episodes via your normal podcast platform. You'll find details of what to do on our normal podcast notes and on the LinkedIn page for the podcast, and on Facebook too.
Right, let's get back to Richard. As you know, we aim to keep the podcast to around 30 minutes, and we do that by focusing on a few key questions.
I'll go first then. Let's go back to the start, Richard. How and why did you come to set up your own accounting practice?
So when I left uni, I went straight to my first practice, which was just a regional two-partner. I think there was about 20 staff. Started in like the junior section, and then qualified there, made my way up, head of business services, and part of me thought, well, this is a bit easy, and part of me thought, well, our department is really good on service. Some of the other departments maybe aren't. So, how hard can it be to just take everything under one roof and be quite, high quality service? But I'd hit a ceiling there. I wasn't going to get any further. And so I moved to a top 20 franchise in the area. And I was there only about a year and a half because they pivoted their whole model away from small businesses and towards academies, when sort of all of the schools were turning into academies, that sort of time. So very quickly, as the accounts manager there, I became an expense that I couldn't afford, basically. The work in my department was dwindling. So I was actually made redundant from there, and then thought, I've not got kids yet. I've not got a job at the minute. This is the time to do it. Thinking, how hard can it be? Probably just like everyone else thinks. Got in touch.
And how hard was it, Richard? How hard was it, Richard? Tell us.
Well, I got in touch with all my old clients from my first job, who I'd had great relationships with, and they were like, yeah, of course. You're on your own, aren't you? Yeah, maybe not. So then, getting clients was hard, pricing was hard. I was lucky in that I'd taken a temporary job in industry, and they were aware that I was wanting to set up my own practice. And so after like my initial like 3-month contract with them, they sort of said, we know you want to do that, we want you here, so we'll give you like as many hours as you want until such time as you're doing that. So I was there sort of essentially full time whilst having meetings and doing like setting up my practice in the evenings, or whenever I needed like a half day here and there, they were just like, yeah, whatever, do whatever you want. And so that really helped, and let me still take a wage whilst I was starting to grow the business. And then it got to the point where I'd moved away from them. Then I was doing like a couple of days a month just helping them with like month ends and stuff. So that actually was really, really helpful for me. And I always forget actually that I had that helping hand.
Yeah. I mean, that the stories like that there are quite a few stories like that. I guess the question is, so it was difficult to find kind of clients initially, then you stayed on. So how did you manage to do that? How did you start to get people so that your business grew enough for you to leave?
Yeah, so I was doing like crazy things like letter drops and like going to local businesses, just like walking in. It's like, hey, do you need an accountant? Which just didn't work at all. Doing like all of the networking, which didn't really work. And then, so what happened was the company that I was working for were corporate property developers. And so they would build like new estates, offices and commercial units. And in one of their estates in Manchester, they were putting in a bar, had a joint venture with a local operator who was good at running bars, but crap at finance and admin and paperwork. And so the company I was working for said, look, said to the operator, look, we'll give you this 3-year contract to come in and run this bar, but only if your accountant is Richard. And so that was obviously a good solid contract for me, and how food and beverage became our first specialism, because I was doing everything. I was bookkeeping, I was the FC, I was the FD, quasi roles. So that was my first big client, and got me so involved with the operations of running their bar and then the food offering and then all the different offshoots they had. And that was really a grounding for then being able to go out and say, look, we're food and beverage specialists, and I'm still running with that and still getting lots of operator coaching clients that because I've built that up over the years, just really sort of still playing off that card basically. So as I retell this story, I remember how big a helping hand I got from that first, from the company that I had. And then we continued, they were obviously audited, but for a number of years, we helped them with their year-end accounts, because they had a weird consolidation of about 60 entities. So we were preparing their stat accounts every year for then the auditors to come in on. So actually, I got a huge helping hand from them. Yeah.
So does that mean that the business now is it where you planned it to be, or has it sort of been influenced by that?
So I always wanted to have sort of entrepreneurial clients that I was really involved in, which just because that's where my portfolio had been when I was training. And sort of we've still got some of that, and they're my favorite clients, and we're trying to push sort of more of that. Necessity has meant that we've taken on lots of smaller clients, year-end only clients, or very process-driven clients. So like carrier bag year-end clients, we've never touched any of that. But like when we went into sort of COVID, we went into lockdown, that was horrendous for us, because at that point, food and beverage events, we were 85% hospitality based.
Oh goodness.
So we'd seen our bills stop being paid from like the January, as people were cancelling events, the pubs were losing trade, and then like actual lockdown happened, and my wife and I, we printed off our client list, and it was literally 85% of our income just had a red line through it. And we thought, I'm not allowed to swear on this, but we thought, oh darn, what are we going to do here? And so we were furloughing staff, staff going on to 3-4 days. We weren't getting paid. We were doing all of the try and keep as many of our clients, still in existence at the end of this. Managed to pivot lots of them, obviously claimed everything we could do for them all. We only actually lost 2 clients, which was,
that's amazing.
No idea how that happened, but it did. And spent most of that period thinking, right, what do we do to not let this happen again? So that's where our social media content creators niche was created.
But how did you decide on that then?
So So I'm not on social media. My wife is, and she was like, I know these people. I can sell to these people. They're going to be tech savvy. Most of them will have fallen into it by accident, won't know what they're doing. I can get the clients. Richard, can you service them? And so we thought about it and was like, yeah, it's all relatively straightforward. There's some niche tax and accounting things, but once we've worked those out, yeah, it's process driven. We can roll it out. It doesn't actually need my input once it's set up. So that's a stream that we created, run really well, and it works without me. So like the junior team can run that. Again, sort of similar, we've then moved on to e-com. Again, clients are tech savvy, probably don't know too much about running a business, or obviously I'm generalizing here, or taxes, and very process driven. Once we've set it all up, once we've set up the initial process, I can hand it off to my team to deal with. So having those process driven streams means that we can build the team. They're getting a lot of the practice and skills they need to. It's not taking up much of my time. So we can now come back to the focus I wanted of like the advisory clients is the go-to word at the minute, isn't it? But the clients that you get involved in, you know everything about them, and you can start to add the value. Which obviously, as we move into the AI world and all of the, QuickBooks saying you don't actually need an accountant, really helpful. It's all gone the whole way round, as it's gone full circle. So you used to see your accountant, and then you paid to not see your accountant, and now you're going to pay more again to actually see the person. So it's just a cycle.
Yeah. So I mean, what else have you learned along the way then? So I mean, actually, we've gone through quite a bit already. So it's don't niche too much without. No, that's great. I mean, don't niche too much without sort of having some kind of backup. Plan. Make sure you've got some process stuff, which is your sort of bread and butter. Even if you don't necessarily enjoy that, have a team sort of built up around it. But what else has kind of cropped up over the years?
We had problems in COVID from the work from home thing. We had a relatively young team, but like team members who've been with us for years and we trusted implicitly, just like didn't work. Told all our systems they were working, but we had real issues with it. So we had to get rid of a couple of people. And we'd always thought that everyone being in the office was the right thing and not doing hybrid. And that sort of cemented it for us. So I know everyone's trying to do it, but we won't do it. We just think that like you learn so much from being in a team in the same place. So that's maybe not something we've learned, but something we've consolidated our thoughts on.
And how do you manage that with the team? Are they all on board with that?
Yes, yeah. Lots of the team are at different stages of learning, so they all get from it. And it's just the way that, because it's never been on the cards, it's never really an issue that's come up. We're all in the same place, we all learn from each other, we all talk to each other all the time about what's going on with the different clients. I guess something else I've learned is to you don't have to work with every client that approaches you, or every client that you approach. You don't have to work with everyone. So we've recently, obviously when you're starting out, you kind of feel that you have to, you need the money, the time and everything. But we've recently been at the stage where we can now work through everyone and say, like, we've not raised your fee for like 7 years. I don't know how that's happened, but we've not. So raising everyone's fees, bring everyone in line with what new clients are paying, and being able to say, like, you're just not our sort of client. So thanks for, being with us for this time, but goodbye.
It's a good thing to do. Really good thing to do.
Yeah. And obviously the typical way to do that is just increase their fee until they decide that they don't want to pay for it.
Yeah.
So
I mean,
so I guess staff based and client based and fee based are the stumbling blocks that everyone has and learn from.
You say that kind of in a relatively casual way in this, but actually there are lots of accountants who wouldn't dare do that. So I mean, you've kind of been pretty brave to kind of go, well, actually we don't need these people and we are going to raise fees. So and that's different. I think there are many people out there who are very nervous to do that.
Yeah, and I was one of them. And so we started in 2014. Didn't really raise fees until about 2023.
That's a long time. Yeah.
It's a long time. It's a really long time. And I was still sort of in that mindset that I guess you can have new fees for new people, but people that have been with you, like having that fee conversation, it wasn't comfortable. And then I started to listen to lots of people, like James Ashford was always like, choose your hard.
Yeah.
And I was like, yeah, that's right. That makes sense. Is it harder to have the conversation, oh, your fee's going up an extra 20 quid a month with 100 people? Or is it harder to not have, I can't even think what that maths is, 24 grand a year? Well, it's harder to not have that money. So let's start off with raising a little bit, break that barrier, as it were, and then as you have more conversations, you can get a bit more. Bullshit's not the right word. A bit more ambitious with how much closer to your actual fees you're charging, and then we've been able the last couple of years to take on some more of the involved clients. I like some more bigger clients, more of the bigger fees, which has meant that we're in a position to raise fees for everyone else. And if we lose some, we lose some. As all of the gurus and experts said, you're going to raise everyone's fees. You're possibly not going to lose anyone. If you lose people, you're going to be in a better position because your income's increased and your work's decreased. And like most people, I was like, yeah, but I know you say that, but it's worked out like that. Some people have had big increases that I was expecting bigger kickback on. Some people have had smaller increases. Someone the other, but then it works the other way. So I spoke to someone the other week. They'd not had a fee increase for 7 years. Their staff had gone from 1 to 8. They'd gone from 1 bank account to about 8 bank accounts. Turnover had tripled. And I was like, look, there's all of these things. Your fee was about tripled or something. And within a minute, they were just like, yeah, no, we're going elsewhere. Even though the brain part of me was like, fine, that's good, that's better for us. I was still for a couple of minutes was like, oh my God, no, what are we going to do now? And then I was like, it's 75 quid a month. It's
yeah.
In the scheme of things.
In the scheme of things, the amount of time I've just released for 900 quid a year, yeah. So
It's
hitting that mindset was a milestone, and having the courage to go over it. It's been great.
Yeah, I think it's very common, and I think one of the challenges that Philippa was alluding to there is firms that don't have, or accountants, and I work almost exclusively with sole practitioners, if they don't have a good enough base and level of income from the practice, they're scared about raising fees for legacy clients, because even losing 900 quid a year is a lot to them. Yeah, I imagine you've got a decent turnover, you're covering the income for you and your wife and 5 or 6 staff, and yes, of course 900 quid is 900 quid, but as you say, if that client's not paying its way, it's freeing up time
Yeah,
that you can spend on clients that are going to pay you, and that that mindset shift is really, really crucial. And do we often ask, what have you learned? How often do you review your client fees? Talking about,
yeah,
some haven't gone up for 7 years.
yeah. So we did one in 23, and there's some people. I basically started at the A's and went down,
Yeah,
which with hindsight is the wrong way to do it. And there were people that got missed off that list because I was like, oh yeah, that's about right. And then we started one December 24 that actually I'm still making my way down that list.
that's
And again,
sort of a fee review, and
another fee review.
I've got clients who've done exactly the same thing, Richard.
Yeah.
You get sidetracked.
Yeah,
they're
and then
important.
so I was like, right, I'm going to tackle this. I'm going to like spend today knocking like 50 out of the park or whatever, and then it just didn't happen. And then I went, right, I'm going to do one a day, because it doesn't take such a huge amount of time. And I did that for maybe 2 or 3 months, which was making really good progress with. And then things just sort of happen. You go on holiday and then you come back, and then there's a bit of this. You need to catch up, and you just lose track of it. But I I am going to put in place and for new clients, it's set in the diary that on the anniversary of their engagement letter, fees are going to go up. It's actually in the planner for the month beforehand. We're going to start the conversations about it. And for most clients, I've started taking the approach that I'm going to give them like 6 weeks notice, and
Yep.
if they don't come back to it, then it's assumed that they're accepting
Yeah.
it, which is plenty of notice, I think, for them to have a conversation or change their mind, go elsewhere. So I think it's probably not technically right, but I just think that's fair enough.
Yeah.
So most of them just carry on and just happy with it. But
Yeah.
yes, it's definitely something that needs to be far more consistent than do it after 9 years, or do it for most people every year but never get to everyone. So
Yeah.
that's something that, and because as I'm now getting into a position where I actually do very little client work. I do I've got my portfolio that's like the monthly, quarterly meetings, coaching, that sort of stuff. But actual sort of like accounting work, I do virtually none. And I've got a really good team, and like they look after themselves, and like they review themselves. Like my head of business services and my accounts head, really good. I delegate there's so much work that I have no view of. I'm happy with them dealing with it. And it's only in the last sort of 6 months I've been able to step back and say, right, now I need to think about actual processes, go through like all of our software changes, the whole like
Brilliant.
AI integrating things is, we've got a minute left. There's no way we can cover that in like an hour. So that's sort of my headspace at the minute, what I'm trying to tackle.
Great.
putting everything in place.
Maybe we can talk about that a little bit more on our Patreon bit, because
Sure.
that's going to be really interesting.
Exactly what I was thinking.
Yeah.
So you're absolutely right. We should start wrapping this up.
We should.
Philip, is there anything you want to just pick up on that makes Richard's firm unique and what we've heard?
Well, I mean, I think what I've observed, rather than what makes it unique, I've just observed this kind of, and I'm sure lots of people can identify with this, but some like truth bombs that have kind of hit you at various kind of moments across your sort of the time that you've had your practice. You know, starting with the COVID, oh shit, what we're going to do now? But you know, you sort, and then the truth bomb of like 9 years in, you've still not increased your prices. So, but what you haven't done, you haven't kind of gone, oh no, that's a failure. You've actually just picked yourself up and started to sort it out. And I mean, I think what you're saying now is, given over the last 6 months you've kind of freed yourself up, there's no excuse to talk about fee increases. But I mean, that's what I would talk about. There's I think it's very interesting for people listening in to kind of see those kind of key moments where something significant has happened, which I think we can all identify with, but how you've managed to pull yourself out of it, which is really interesting. What about you, Mark? Should we?
Well, I think we should move over to the Patreon podcast when we finished our wrap up. Yeah. But before we do that, Richard, how can listeners find out more about you and your firm? You've muted yourself because of the noise behind you.
No, try again.
Still can't hear you. There we go. Nope. Now we've lost the sound.
Oh, there we are. There we are.
There we are. Okay. Yeah. So obviously, I'm on LinkedIn website. Everyone. I'm not really on social media. I joined Facebook purely to be part of some accounting forums.
But nothing wrong with that.
I can relate to that. Well, we will tag you in the podcast notes, right, and on the podcast page on LinkedIn. In our extra bonus interview for Patreon subscribers only, we'll ask you to talk about the biggest challenges you're currently facing, how you're addressing them, and how you're integrating AI in your practice. But before that, Philippa, how can listeners find out more about you and Insight 101?
Well, you can find me on LinkedIn. As always, that's the best place to find me. If you're looking for support around your marketing and your brand and want to kind of have a think about what makes you unique, because with AI and other things going on in the marketplace, it's highly competitive, so you need to stand out. Right, Mark, how can people get in touch with you?
Well, online everywhere. I'm Bookmark Lee. Even my business card is a bookmark. One thing I've learned after years of working with accountants is that running your own practice can feel lonely, even when things look fine on the surface. And if you'd like things to feel clearer, smoother, or more rewarding, that's where I come in. Whether you're after better clients, fewer frustrations, or more profit on your terms, I'm always happy to chat. No pressure, no pitch. Sometimes one good conversation is all it takes. Other times it might lead to us working together more regularly, or you might want to join my Soul Practice Club. Either way, the first step's easy. Just reach out. In any event, I'd encourage you to reach out and connect with both Philip and me on LinkedIn. And do please follow the podcast pages on LinkedIn, Facebook, and on Patreon.
Sadly, that's all we have time for today on the main podcast, but thanks ever so much, Richard, and look forward to speaking to you a bit more in a minute. Our thanks again to the sponsors of the podcast, Pinnacle Global Group, your trusted outsourcing partner. Do check out their website and let their CEO, Mayank, know how you heard about Pinnacle Global on the Accountant Success Secrets podcast.
Thanks too to the Tax Advice Network, the easiest way for accountants to reach specialist tax advisors. Remember, there's no charge for using the website findataxadvisor.online, where you can also access weekly tax tips written especially for general practitioner accountants.
So if you've enjoyed this episode, please share the love online, subscribe and leave a review on Apple, Spotify or YouTube, or just get back to us directly yourself. It all helps to broaden the reach of the podcast, and do please contact either Mark or myself if you'd like to be interviewed too.
Yeah. As I say, we have 2 dates left before the end of the year, and then January, where we're particularly keen to speak to accountants who will have time in January, and there's an increasing number of them around. Thank goodness. Thanks so much, Philippa. Thanks again, Richard. Another wonderful guest. Delighted to have you here. Next week, our guest will be Stuart Harris, who runs Stuart Harris Associates, the friendly accountants in North London. But before then, we're going to get some further insights from Richard for our Patreon subscribers. So please head over to our Patreon page, patreon.com, Accountants Success Secret, singular, don't ask. That's where you'll hear about the biggest challenges currently facing Richard and his approach to them, and talking about how he's integrating AI into his practice too. Otherwise, until next week or anywhere else we might meet online or in real life, bye-bye for now.
Bye.
Bye.